if we look at the 14th five-year plan so far, they haven't really announced a numerical number or a new target for the next 5 years. But given the details has not yet been released and all the other quantitative targets have not been released, it's hard to say 100% that there will be no GDP target. But so far at this stage, probably there's no target. But in the near term, we're still looking for a further pickup of China's economic activities. We're looking for headline GDP rising to 5.5% in the fourth quarter of this year before surging to 18% in the first quarter of next year due to a low base effect. And on a year-on-year basis, we're looking for real GDP rising from about 2% this year to about 8% next year. One of the very important drivers is the fiscal stimulus, which is sizable, but the pace of deployment of the funds has been relatively slow. For the first 3 quarters of this year, only 51% of the budgeted money was spent so far, leaving roughly half of those budget deficit or fiscal stimulus in the fourth quarter of this year if they were to be fully implemented. So we're still looking for a further pickup of fiscal impulse and therefore a further pickup of economic activities to come.
What does this all mean for investors? One thing we've been tracking over the last few months or so has been foreign interest, especially in China's bond markets, but other assets as well. Do you expect this to continue going forward?
Yes. Over the last few months, we have observed a very strong one-way appreciation expectation of the CNY, and as well as a extremely strong pickup of foreign inflows. Just looking at the numbers, for example, in the first 3 quarters, foreign net purchase of China domestic bonds increased by 86% from the same period of last year. So this year, the foreign inflow is on track to reach 1 trillion CNY, and next year, most likely, it might reach 1.2 trillion. So this trend is quite unlikely to reverse because the currency fundamental of the CNY is just too strong. We are unable to find any other currency have an equally strong currency fundamental as the CNY. And together with the very high interest rate premium, for example, 10-year CGB versus 10-year U.S. Treasury yield difference is now reaching a record high, and this around 240 basis points is a lot under a zero rate environment. And also together with the ongoing global bond index inclusion and so on, we're looking for a further diversification into China assets, including China bonds ahead.